Nvidia CEO Jensen Huang put rumors to rest when he acknowledged there were no delays in the ramp of the upcoming Blackwell platform for accelerating computing solutions. The CEO of the multi-trillion-dollar company also attempted to relieve investor concerns about the durability of demand for its products. How long can revenue grow? Let's take a look at precisely what Nvidia's CEO said that made investors feel a lot better about owning shares of a stock that's already up over 100% in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in the conference call that followed the earnings release on August 28th, the CEO came on to say that the change in the mask is complete. We're sampling functional samples of Blackwell, Grace Blackwell, and the variety of system configurations as we speak. And the functionality of Blackwell is as it is, and we expect to start production in the fourth quarter. So that was great news for Nvidia stock investors to hear that they continue to expect to start production in the fourth quarter. There are no material delays. Remember, a couple of weeks ago, there were rumors that Nvidia would delay this product by several months because they wanted to change that mask to increase yield, production yield. The CEO put those rumors to rest, saying, nope, it's on schedule, fourth quarter this year. We're going to start ramping production. And in fact, we're going to generate a couple of billions of dollars in revenue from this new Blackwell technology. So moving on to the CEO's comments about the durability of demand. How long can revenue growth sustain? And the CEO, in response to a question asking about that, answered, look, we're going through two simultaneous platform transitions at the same time. The first is transitioning from accelerated computing to, actually he corrects himself and says from general purpose computing to accelerated computing. The CPU scaling has been known to be slowing for some time, and it has slowed to a crawl, and yet the amount of computing demand continues to grow significantly. And so the answer to that problem is accelerated computing. That's precisely the solution that Nvidia provides with its Blackwell and Hopper technology. Accelerated computing, of course, speeds up applications, but it also enables you to do computing at a much larger scale, and that translates directly to lower cost and lower energy consumed. And that's been a big interest as well as AI scales, is lower energy consumption. Some data centers have difficulty getting built because there isn't support to create that kind of energy to support that kind of computing requirement. Well, with accelerated computing, you decrease the amount of energy consumed while you also increase scale. So that's one of the factors driving demand for Nvidia's products. The CEO says that it's not unusual to see someone save 90% of their computing cost. And if you're saving somebody 90% of their computing cost, of course they're going to want to spend billions of dollars with you to purchase your technology because you're reducing their cost of something they need to do anyways, right? You think of some of these recommender systems like YouTube, right? You get recommended content. YouTube is using algorithms and artificial intelligence to decide which content to recommend for you. All of that computing, that's a lot of computing power. And if Nvidia can lower those costs, of course Alphabet will be willing to spend billions of dollars with Nvidia because they're seeing lower cost of their core product categories already, let alone all the new use cases that we're not even getting into just yet. So the second reason is enabled by accelerating computing because we drove down the cost of training large language models or training deep learning so incredibly that it's now possible to have gigantic scale models, multi-trillion parameter models, and that's what created the generative AI revolution. Because Nvidia drove down the cost and increased the scale so considerably, that opened up these new use cases, these new technologies on the back of this technology. So it was Nvidia to begin with driving growth in this technology, which then increased the number of use cases that can stem from accelerated computing. He goes on to say generative AI is a fundamental new way of doing software. You could learn the function of almost anything, and anything that you have that's predictable, anything that has structure, anything that you have previous examples of. Frontier models are growing in quite substantial scale, and we're all seeing the benefits of scaling. And whenever you do double the size of a model, you also have more than double the size of the data set to train it. And so there are larger frontier models trained on more modalities, and surprisingly, there are more frontier models makers this year than last year. And so all of this is driving increasing demand for Nvidia's product. That's the reason why the CEO is going to great lengths to explain what benefits come from using its accelerated computing platform, and to convince investors that the people that are buying Nvidia's platforms, they're getting a great return on investment. And so they'll keep buying it as long as that return on investment is so massive. And that's what's driving growth, and that's what's driving revenue, that's what's driving sales. And so for investors, if you're concerned about how much longer demand for Nvidia's products could last, well, what the CEO is basically saying here is as long as we can continue providing these levels of performance improvements and performance enhancements, there will be buyers for our products because they're going to be saving money. They're going to be creating new monetizable opportunities. And so they're going to want our products. So the largest computing systems in the world today are recommender systems, and they're moving from CPUs to generative AI. And you could think of recommender systems like the one I mentioned earlier with YouTube. You could think of Apple Music and how it chooses a song to recommend. You could think of Netflix, how it chooses a movie to highlight for you that will most likely get you to watch and engage with the platform. You could think of Meta platforms and how it uses recommender systems to surface an image or a post that you're most likely to engage with. Or you could even consider other social media platforms like Pinterest and others that are also dependent on surfacing content using recommender systems to surface content that you're most likely to engage with, because that's what they depend on, is your engagement with the platform. The more engaged you are with the platform, the more advertising the company can show you and the more revenue they will generate, which ultimately drives profitability on the bottom line. So those companies will all want to use these accelerated computing systems to drive better recommendations and drive better profitability for the company. Remember, Nvidia sells its products to other businesses. And when other businesses are buying your product and you're not selling to customers, the primary driver for that purchase is return on investment. The primary driver is, if I spend $1 billion with you on this product, what benefit am I going to see in terms of dollars? Am I going to get a combined $1 billion or more benefit as a result of lower costs and increasing revenue? And if the answer is yes, and the answer is yes within a relatively short amount of time, the companies are going to purchase that product, because they have, some of these large companies, they have billions of dollars to spend. And what they've had difficulty with, I'm talking about these companies like Alphabet and Amazon and Microsoft, what they've had difficulty with in recent years is finding areas where they can spend their large cash piles with an effective return on investment. Because when you're dealing with the tens of billions of dollars that these companies are dealing with, it's hard to find areas where they can invest that will bring back sufficient return on investment. That's not an easy thing to do. And so when these companies saw NVIDIA and what it can do with the accelerated computing, they said, great, excellent, excellent. For years, we've been looking for ways to deploy our capital. We even started paying dividends. We increased our share buybacks because we couldn't find profitable areas to spend our money. And now that we have this AI revolution, this increase in technology, in innovative technology, we're happy to spend on this because that's what we were looking for. We would much rather spend money on something that's going to bring back a good return on investment instead of returning capital to shareholders because we don't have any ideas, we don't have any better ideas on what to do with this money. So I think the CEO did a lot here to explain to investors, to highlight to investors why businesses are buying its product and why investors can expect businesses to continue buying NVIDIA's products for several years more. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.